Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about Astral Limited, a potential large cap stock which is currently a mid cap and did extremely well over the last 5 6 years. Let's understand about its numbers and what lies ahead for the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. And also, I'm not an official portfolio advisor. I'm not a member of the NSE and BSE. And whatever I discuss about stocks, companies, markets, political situation, geopolitical situation, etc., globally, economic situation globally, everything I discuss from my experience and from my knowledge of over the last 11 to 12 years, what I have studied and being in the market for the last 11 12 years. So I am not an official financial advisor. Kindly do consult your financial advisor before taking any call or putting in money into the markets or in any form in any asset class. Before I talk about Astral, here's a small request. Kindly support me on Patreon, and once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. You'll have access to my portfolio, and you'll have access to a lot of podcasts on the market talk on the economy, on where the market might be headed going forward, etc. So you can ask queries there. You can join me there. You'll get a lot of content on Patreon, or you can join me on YouTube or WhatsApp as well. So now let me take you to the screener website and let's discuss about Astral. So a company that is into making pipes, and there were other companies into pipes, say Supreme, or there were other companies that are in this business. But when Astral came into it over the last 10 15 years, it has grown in leaps and bounds, and is currently probably the market leader in this space. The market cap of the company is around 54,000 crores. And if you look at the stock has done exceedingly well. If you see over the last 5 years as to how the stock has performed, it has done exceedingly well. So from around, say, around 400 rupees or so, or 500 rupees or so, in August of 2018, we are at 2000 rupees. So 4x over the last 5 years has done exceedingly well. 12,000, 14,000 crore market cap has swelled up so much. So uh, if you look at the quarterly results of the company, then in the June quarter, what they did was around 1280 crores versus 1213 crores. So there was a little bit of jump in the sales. But if you look at the profit, operating profit from 170 crores, it has come out to be 202 crores. So there has been a decent 15 16% you can say increase in profitability in a very difficult environment, and in a situation where April and May has seen rains in some part of India. So the business did not pick up that much, but Astral did well. So the margins came out to be around 16% versus 14%, and that is a notable thing, and that is why the stock has not fallen even after the results and has been performing. So 2%, you can say, uh, improvement in margins is a big thing, where other companies are struggling to just keep up the margins of last year. They have Astral have been improving it. It is futile to look at quarter on quarter, because this is a seasonal business, and December and March are their big quarters. So let's see how December and March pan out. September could be subdued, but overall, I see the company clocking around 5,800 crores or so kind of sales. I think 56 to 5,700 crores of sales, and that will be corresponding to, say, if I say a 17% margin for the year. So if we take 5,600 crore sales, and on that, if we say the margins comes out to be around 17%, we are seeing we are going to have nearly 950 crores of, you can say, operating profit versus 810 crores last time around. 17 18% operating profit growth. And even if we take in depreciation, everything, and the taxes part, there could be a 20% increase in, you can say, profitability on the bottom line. Now 20% increase in the bottom line is similar to what they did in FY22, because in March 22 they did an EPS of 18 rupees versus 15 rupees in March of 21. So that means they are back to their previous, say, growth levels. We cannot expect the company to do 50-60% growth like they did in between 2020 and 21. But if you look at pre-pandemic, they were doing around 7.5 rupees of EPS, and this time around they are going to come out with some 20 rupees of EPS. So uh, that's a phenomenal increase in the last 4 years, that the company has come back to the same profitability as they were doing earlier. So a 20% increase, that means a 20 rupees EPS is what we expect. Based on that, the company is stretched. I won't say that it is not stretched or anything. It is trading at 100 times earnings, and that is where one need to be careful in here. What you need to do, and I'll discuss about it in a bit as to where to buy. But somebody who is holding, I think these levels are decent enough. I don't see major declines from here from a 1 to 2 year point of view. But in a shorter term, you could see some decline. Balance sheet is pretty strong, with borrowings of only 80 crores, so nearly debt free, completely debt free. If you look at the shareholding pattern, then 56% is with the promoters. Uh, the FIIs have increased holding in the June quarter, and it's now 15.6%. The DIIs have reduced a bit, but not to that extent, and that is why public shareholding has reduced from 13.8% to 12.6%, which is good in a way that that in terms of public shareholding, uh, it's not huge. So whenever the selling comes, the free float is not that big. On one hand, you could say that in 2-3 days it could fall, say 8-10%. But on the other hand, since the stock is in stronger hands, then I don't see major declines, and that is probably the reason why the stock is trading at 100 times earnings, because most of the large investors who have bought it at lower levels, at 1200, 1300,000 levels, are refusing to sell the stock here because there is value. Because the 20% growth in this kind of a business on the profit front and 15% growth on the sales front in a very difficult interest rate environment is extremely difficult for most of the companies. That means Astral is gaining market share, and that means that is why the stock is performing at the moment. Now, where to buy the stock? So if you look at a 6 months chart, and this is just a relative technical understanding as to where the value may lie, at least you need to look at a 100 rupee fall. Say buy it around 1900, between 1900 to 1840, 1830. So 1900 to 1800, around these levels would be good levels to get into, not at these levels. So 5 to 8% decline from current levels uh, would be the level to probably accumulate from a 2 year, 3 year point of view, because sales and profitability are only going to increase going forward. So this was my video on Astral. Please like and subscribe my channel, hit the bell icon so you get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.